Good afternoon, guys. It's Workin bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase. By the way, guys, happy Friday. Hope you guys are ready for a great weekend. I know I am. We're looking at, as I said, guys, Bitcoin just kind of moved completely sideways, as I told you in my last few updates. And if you haven't listened to my last few updates, I'd go back and look at the update running out of guppies, as well as my last one called flatline, and that gives you an idea of what's going on with the overall market right now, guys. But as I said on my last update, Bitcoin has literally just kind of flatlined here. As we pulled out to the bigger picture, as I've showed you guys numerous times, so I kind of pull out here on the weekly chart, we can see that obviously prices continue to make a series of price continues to come up, not quite reach as high as the prior, crash back down around the 6,000 area, back up a little bit less, until eventually we just run out and price just kind of, as I said, just kind of flatlines here. And as we zoom in here, we can see that price is kind of trading now within this range. This is about the tightest range I've seen price trade for this long, or this period of time. We've been within this range here for about almost 10 days, 9 days, since about October 15th. So what is it now, October 26th? So actually just over 10 days now. I've not seen a range like this tight for all of 2018, and that tells you guys obviously that we have completely run out of guppies, that market makers' old tricks are not working anymore, but it also tells you that price is more than likely about to make a major move, about to completely shift the trend that it's been in. Now that doesn't mean it's going to shift to the bullish, to become bullish, but it does mean that we're going to, this trend that we've seen of price just falling back down to 6,000, rising back up to a little bit lower point than it was the prior, and then falling back down to 6, that trend is going to break. That might mean a break of 6,000 down to new 2018 lows. That might mean a bullish break up. Excuse me. So the range that we're going to be watching, obviously in the short term, on more of a microstructure level, we're watching this range here. We're watching a series of lower highs, higher lows, price getting compressed here within this little wedge here, and of course as it breaks out here, I'm going to be very curious to see which way price goes. Watching to the downside, I'm going to be watching this area right down here, all the way down to about 61.15 right in here. I'm going to be watching price to come back down, hit that order structure. That might be a very good area to buy if you're a scalp or swing trader, targeting anything above 63.60. That wouldn't be a bad idea. Knowing that if this does break down, I'd have a very tight stop loss, knowing that price could crash and just snowball down to new 2018 lows. Of course, if it breaks 61.15, that's going to get my attention big time. I'm going to expect probably new 2018 lows at that time if we do break 61.15. But certainly if we break this wick down here, sitting at about 6,040, somewhere thereabouts, if we do break that, that would signal a new trend, the start of a new trend. And again, more than likely, guys, of course, coming down to new 2018 lows. To the upside, I'm going to be watching 61.40. 61.40 is an extremely relevant resistance, guys. It has been a resistance and or support many times in the past. If we do break above that zone, guys, of course, that's going to grab my attention, especially if we can start consolidating on top of that zone. But the area that I'm looking to break above is 67.50. Pardon me. If we can break above 67.50, guys, start consolidating above 67.50. Certainly, if we can break up a new high, break this wick right here, which sits at about, we had almost this double top, 1, 2, right here, that sits at about 6,800, 6,810, somewhere thereabouts. If we can break above that, guys, break above that 6,810, or at least consolidate above 67.50, that's also going to signal a new trend. And at that point, guys, I'm going to start to get very, very bullish. As long as we trade within this range, and if I kind of zoom out here, guys, and pull out, you can see on volume profile, this range sits right in here, guys. As long as we're trading anywhere within this range right here, going all the way up to about 67.50, all the way down to about 61.15, anywhere in this range, guys, it's just going to be business as usual. As soon as we do break that range up or down, I do believe that's going to very likely signal the start of a new trend, be that up or down, and I do think it could snowball very, very quickly. Now, for it to break bullish, one of two things is going to happen. Obviously, we need some kind of bullish news to bring in new money. If I've told you guys many times, we need new money to enter this market for any kind of a sustainable bull run. That may come in the form of the bulls just starting to enter. If we get some kind of speculation about ETF approval or any kind of bullish market moving news, I should say, that could spark a bull run. Even a trip all the way up to 67.50 could retail investors could start to get extremely excited. They could could start thinking this is it, and of course just piling in, which just would snowball in the upward direction. And the same thing is true downwards, guys. If things start breaking down, and retail investors could very quickly think this is it. We're going down to those $3,000, $4,000 levels that some analysts have been calling for, and at that point it could just be a massive sell-off, trigger a massive sell-off. What's very interesting though, guys, is retail investors are getting much smarter. If we come over here and we look at our long and short positions, here we're looking at the shorts. We can see that shorts stacked. Shorts, we had this major drop when we had that spike in price due to that tether fear. Of course, then shorts started to stack again. And then we had this drop off in shorts, as I've explained before. And this was not due to a rise in price. This was due to people taking profit, which was very significant. This showed you that retail investors are starting to act more like day traders, more like experienced investors. They've been burned too many times, so they're taking profit. Why is that important? That's important because if we do get a move in one direction or another, typically if we got to move up, you'd start to see longs just start to stack. And they would stack and stack and stack and stack and stack. And they would hold on to their positions. Now, I think if we get a move up, yeah, we might see some long stack, but I think more than likely we're going to, as price moves up, we're going to start to see those retail investors that got into long positions down here take profit. When they take profit, what do? Of course, they sell. When they sell, what does that do? That pushes price right back down. The opposite is also true. If price starts to drop, of course, people might start thinking that it's going to go to lower levels. We might get some people entering in short positions, but very likely anyone that's entered a short position up here, as price starts to drop, what are they going to do? They're not going to just hold their short positions this time as they have in the past, expecting prices to come down to $5,000, $3,000. More than likely, a lot of them are going to take profit. What happens when you take profit on shorts? You buy. Okay, and of course that puts it right back in this range. So that's why we've seen this tight range that we've ended up in here, guys. And I do think this is going to break. I do think that we are going to get a trend change in one direction or another very soon. Not just because we're continuing to make a series of lower highs and higher lows, which does signal that. And of course we are seeing that if we come over here and we look at our, pardon me, guys, take a little breath there. If we come over here and we look at Coinbase, this is on the 4-hour chart, look at our exponential moving averages and moving averages. What are we seeing? We're seeing in the Bollinger Bands, we're seeing the Bollinger Bands start to bottleneck, get squeezed tighter and tighter. We're seeing that 8, 21, and 55-day EMA all converge on each other, as well as the 50-day moving average, all converging on each other. Anytime you see that, that signals a larger move to come. Doesn't mean bullish, doesn't mean bearish. It just means a larger move is to come, a break in one direction or another is to come. And we're starting to see that big time here. And especially if we come over here and we look at our weekly chart. This is looking at the weekly, guys. What are we seeing? We're seeing the exact same thing. We're seeing the Bollinger Bands seriously bottleneck in a way that we've not seen, of course, all in 2018. But usually we haven't seen this kind of bottlenecking on the Bollinger Bands, relatively speaking, with this big swing in price. I don't know that we've ever seen it bottleneck quite like this. Now we've had it narrower, but of course we're having to compare that to where it was. So comparing that to where it was to the degree at which it's narrowing now, I don't know that we've ever seen it bottleneck this tight, this much. And of course we're also seeing the 821 and 55-day EMA on the weekly all converging on top of one another here. So again, all this signals a larger move possibly to come. What else are we looking at? Of course, we had that larger wedge here that price just kind of, instead of having a major move up or down, just kind of moved sideways and broke out of that wedge very anticlimactically. And that was because I do believe that was due to this big move in tether. We had this big move that just threw everybody off due to the fears of tether. And that just caused this extension of this sideways movement here. But I do believe it's going to break. And if we come over here and if I zoom out here on the weekly chart, get rid of all the indicators except for this line. What is this? What do we look at? I haven't looked at this trend line here, or I haven't showed you this trend line here in a very long time. But if we zoom out here, going all the way back to March of 2017, so we're looking at about a year and a half now, a little over, this trend line that was established all the way back in March of 2017, we have just now started to come back up against. So this does suggest that this is either going to break, and if that does break, typically when you're breaking a trend line, a very strong resistance and or support, usually when it breaks heavily. So if this does break down, we could see prices dropping very, very quickly. And of course, I'd be looking at, initially, I'd be looking at prices to possibly drop somewhere into this range right here, just that bottom of this area right here, that we can see that it wicked in here a few times, created a very strong supply zone down in here. So we could see it break through here very quickly, wick into this zone, and then explode right back up. But if that does break, guys, then I'm going to be watching this area right in here, right there. This is the area I'm going to be watching, guys, and that's sitting somewhere between about $3,000 and $4,000, somewhere thereabouts, guys. Now, we may get caught up in this zone here, pardon me, right here as well. We have a little bit of the zone right here, sits at about between about 4,000, 4,500, somewhere thereabouts, guys. But these are the zones. We've got about 3 different layers to go through, and I wouldn't expect it to drop anywhere below that. But 3 different layers to go through. In my opinion, I think we'd probably get a reversal right here. But if that does break, I think this is the area somewhere around 4,500 is where we'd get that major reversal. I don't see it coming down this low. I just don't see it. I think there's, I think this would be too tempting of a buy for many retail investors, as well as many whales to come in and scoop price up at that line, knowing that ETF approval could happen literally at any time. More than likely, it's going to be the beginning of if we're just looking probability wise, my guess would be the start of 2019. But who knows? If we get some kind of SEC bullish news that even hints at possible approval, if it looks like it's a sure thing, then you're going to see money flooding in, wanting to get on that sure thing, expecting when the approval does happen that of course it's going to skyrocket to the moon. And what does everybody like to do? They like to get in early. So this would suggest, you know, in my opinion, this is just complete opinion, 4,500 would be a max low. I'd be looking for a reversal of somewhere around 5,000, this area right in here. And that's if this does break, if this trend line does break. We could very, very easily see it break to the upside as well, bounce right off this trend line and come right back up, just like we saw here. We saw price testing this trend line numerous times between March and April before it eventually broke back up, came back down to test it a couple more times for about 2 weeks in July, and then just took off for the rest of the year. So we might see something like that here. We'll have to wait and see how that kind of plays out, guys. But we are definitely coming up against this trend line, which does signal that, along with these tightening Bollinger Bands here on the 4-hour, on the weekly, along with this series of lower highs, higher low, all leading up to an explosive move in one direction or another. And we're just going to have to watch and wait and see how this ends up playing out. And for now, as I told you on my last update, guys, as long as we're in this range, continuing to buy somewhere around between 62.35 and 61.15, targeting anything above 63.60 is not a bad idea, just having a very tight stop loss, and continuing to short the market anywhere above 65.40 all the way up to 67.50, targeting anything below, at or below 63.60. Those are the ranges that I'm watching, guys. Even though we're getting squeezed tighter and tighter, that would be the kind of the range that I'm watching if you are looking to play this market. Personally, I'm out. I'm not playing this market at all, other than my long-term holds. Of course, I do hold Bitcoin in my long-term hold portfolio. I will not sell that for any reason. That's a small portion of my portfolio, though. About 70% of my fiat I have just sitting in fiat at this time. About 30% of my portfolio is long-term holds. 70% is sitting in fiat that I use to trade. And right now, most of, I can't say all, but most of my position, most of that 70% of that fiat is sitting on the sideline waiting for this trend to break in one direction or another. Now, this is not financial advice. I can't tell you what to do, guys. I'm just telling you, just be smart, and whatever you're doing, make sure you have a very tight stop loss. So I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I'd appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.